Welcome. I'm Catherine Magana here with Greg Carroll, Steve Wolf, Vince Stefano, and Rachel Ivanovich. You have the whole crew today. Today is December 23rd, and we're going to provide you some insights on the markets, taxes, and we also want to recap 2025. We know we're approaching here the end of the year, and this will be our last podcast for 2025.
So can I just chime in here? The reason we're doing all five of us is basically because it's the end of the year, and we thought that it would be appropriate for all five of the people who are in this program to give their final words for the year and maybe what's going to happen next year. So I will share my mic with Vince, and boy, I hope you brushed your teeth. So.
I'll share.
All right. Well, so as we mentioned, today is December 23rd. As of yesterday, December 22nd, just giving you an update of where we're at year to date. The Dow Jones were up about 13.68%. The NASDAQ, which are the tech stocks, are up 21.33. We've had a little bit of a recovery from last week. The S&P 500 is up 16.95, and the Russell 2000 is up 14.74. So I guess the question is, where do you think we're going to end up between now and the end of the year? Do you guys think we'll stay, or do you think the markets are going to move?
Well, a few podcasts ago, I said that I thought the S&P was going to do 20% this year, and we might get there. I don't know. What did you say it was?
So the S&P 500 is at 16.95, so about 17%.
So we got 3 days.
Because we're taking bets,
right?
This was earlier in the year.
Well, Santa Claus rally, between Christmas and New Year's, easily.
Yeah. And since last week to this week, we're up almost 2.5% in the S&P 500. So
I could be right.
No. So that's where we're at with some of the markets. Anybody else have any?
My money's on Vince.
Okay.
Steve was a wimp. He didn't say.
Well, I said I didn't know, and I still don't know. But one thing I do know is that you won't be right. It will not be up 20% by the end of this coming week. That means a 4% gain.
No, by the end of the year.
Yes.
So that means the end of the year is January 31st. So a lot
December.
can happen between
today
December 31st.
December 31st.
December 31st.
Wait a minute.
What year are you?
Where am I going?
He wanted a little extra time to get
No
there.
wonder you said 20,000.
20%. Okay, so looking back at 2025, one of the things I thought was interesting is looking at international and emerging markets. So the international is up over 20%. I was looking at the EFA, which is an ETF, EFA, I'm sorry. That was up almost over 27% year to date. And so international sector over, the last 10 years has underperformed. And this year it just really skyrocketed.
Especially EM, emerging markets.
And that's done really well as well.
Yep.
And so
the EFA index is Europe, the Far East, and Asia.
Yeah.
Yep.
And so that's something I wanted to highlight. And then I'm sure everyone will touch on is we saw for the sectors, AI was the big kind of leader this year in technology. Secondary to that was clean energy, then healthcare and cybersecurity. So we did see those were the top sectors for 2025. And obviously if we can end where we're at or have a little more gain between now and the end of the year, I think we'd all be happy. Considering what we went through, I know the beginning of this year in 2025, all we could think about and talk about were tariffs and what's going to happen with taxes and estate planning, and there was a lot of uncertainty.
Why are we still talking about all
that? We're just recapping.
Yes.
Well, the tariffs are still, being changed every day, and some are going away, some are, being implemented.
So who around this table believes that AI will be the leader next year in the stock market?
So you mean like tech and telecom type companies, or?
Did I not speak clearly?
Well, AI.
Technology.
Well, you said AI companies.
I did say that.
Yes.
So artificial intelligence and those stocks that pretty much led the way this year, will they be the leaders again next year?
I'm going, Vince says yes.
I am going to say yes. And the reason I'm going to say yes is because I've said this all along. Most companies are anticipating a significant return on AI investments towards the second half of 2026 and on into 2027. But you have to remember the market anticipates that and will start actually moving or have these stocks move prior to the second half, if that's truly the case. Now, the big bugaboo on this is going to be the midterm elections and what can happen. So, again, I'm going to be optimistic and say that, yes, these AI stocks are going to continue to lead. And you may see a broadening of some AI stocks, but I do think that AI itself, whether it's chips, components, software, hardware, structures, you name it, I think that those kind of companies are going to do extremely well in 2026. So keep your powder dry. Don't be too conservative. And remember, as interest rates start coming down, risk assets start going up.
So speaking of interest rates coming down this morning, apparently the numbers came out on inflation, I believe it was, or no, productivity, and we were at 4.3% versus the expectation of 3%, which is a big difference. So I'm not 100% convinced that rates are going to come down anywhere near what people think. I think that Trump will push for that, but I'm not convinced that that's where we're going.
I think that interest rates, the Fed might lower rates 1 or 2 times a little bit. That's not going to be the driver of the general interest rate environment. Global debt is skyrocketing. We had more record amounts of corporate debt this year. And when you have that much supply, rates might just climb up. So I'm a little concerned about where the 10-year goes, and that's not going to help mortgage rates, which a lot of people are looking for the Fed to lower rates. Different,
and that's kind of what I'm saying.
Trigger,
that
yeah.
I'm not convinced that rates are going to keep going down.
Right.
Other than maybe once when the new Fed chairman gets in to say, "Okay, I did what you want, Mr. President.
Right.
Now where do we go?"
Right.
So recapping rates for last year.
Rates, yeah.
So for 2025, we had 3 rate cuts, so 75 basis points. It actually started September, then October and December. And then looking at for 2026, the next meeting in January, the probability of no change is about 86, almost 87%, at least for January. But like Steve mentioned, I do think there'll be some potential rate cuts. We just don't know how quickly, so we'll wait to see. But definitely we did see some rate changes this last year. And then looking at where we're at year to date, and this is as of December 23rd, the 1-year CDs are 3.65, which is slightly lower than last week. And the treasuries haven't really moved. They're at about 3.57 for the 1-year treasury. So some of the short-term fixed income obviously has come down a little bit. But
I think that we may be stuck in place for a while with rates, because there really isn't any great reason to lower rates, nor is there a great reason to raise them at the moment. So it wouldn't surprise me if we stayed here for a while. We always, there's a private company out there right now. I can't remember, something like Kashi or something like that.
What do?
They do futures markets.
Yeah, predictability. Yeah, Kashi does, what they do is they do a lot of predictions on what's going to happen. So they've been out there predicting rates, they're predicting the market, they've been predicting where crypto may go, but you're right.
But isn't this more like it's almost like a gambling site?
It's a gambling. It is. It's very much, because people can actually go in and make bets on where Kashi thinks the rates or whatever they're betting on is going to go.
Well, that's a different market than we play in there.
Yeah.
It is, but I will say that there's a woman and another, I think a man, who started this. She is now the youngest billionaire I believe, in the world.
Really?
Yeah.
Wow.
She's in her 20s, and she's now a billionaire because of this.
Wow.
So there's money in betting if you're on the right side.
There's money in the lottery right now too. I think it's about $1.6 billion. So you could pass her right up.
Yeah. Wonder
The
what your
odds
chances.
1 in 292 million.
Gazillion.
What's
yeah.
that?
I think they put that on the news the other day. That the odds of winning the lottery was 1 in 292 million.
But you're telling me there's a chance.
Yes. I might be wrong on that, but
Yeah.
And then another kind of sector that's done very, very well this year is gold and some of the commodities. So that's really been an area that's grown and been very strong this year.
Anyone have an opinion as to why they think gold has done so well?
I think it's because the dollar has been soft, and it's cheaper for other countries to buy gold in dollars. And a lot of central banks are buying it around the world. So if they can buy it cheaper in dollars, that demand keeps going up. And I think the central banks are some of the biggest buyers right now.
Do you think there's some fear out there? Because generally speaking,
Yes.
And
gold
there's some fear.
goes up when
Absolutely.
there's fear.
There's that geopolitical tensions out there as well. There's, silver has been doing actually almost twice as good as gold. and that's more industrial demand, I think. But gold's been on a really nice run. But
over the last year, it's been unbelievable.
And I think if our rates continue to go down on the short end, that'll keep the dollar soft, might support gold a little bit longer.
I have always hated investing in metals or commodities because you never know what pushes them.
Right.
It's had a great year this year. Who knows? Next year could be down by 50%, and you'll never know the reason until after it's over.
Yeah, I think it exceeded a lot of people's expectations for this year. I mean, it's just been straight up.
I'm going to give kudos to a client of mine who early in the year started investing in gold and silver and has done incredibly well. I don't know much about the metals, so I don't particularly invest in them. But he did make a great call early in the year. And I have heard some of the pundits on TV start talking about copper for next year. So start thinking, if you're looking at a metal that hasn't performed well, look at copper.
Yeah, but you know what? Maybe copper does well, but I think what's happening here, we're going away from copper and into fiber. And it doesn't need as much energy, so that's going to have an effect on that. I think you're going to see that change over the next couple of years. So, yeah, copper may be okay in the very near future, but I think that there's a limit there. I'd be more interested in the fiberglass.
Again, I'm not saying anything about copper or metals. I'm more on the technology side, but hey, they said copper, and since we're not making pennies anymore, I don't know what all they're going to do with all the copper.
Yeah, well, they can melt all the pennies down, and
that's true.
They'll have a lot of copper.
Yeah.
That's going to depress the price. So avoid copper.
No, I don't.
You heard it here first. Buy it and avoid it.
I'm just saying. I've heard pundits now start talking about copper for next year because that metal has underperformed this year. So. It's like value stocks. They always start pitching value stocks when they underperform growth, but there's a reason why they underperform.
I think you can buy a basket of metals if that's really what you want to do as a diversification tool, just like anything else, but trying to pick one or the other.
I just think investing in commodities is a tough way to go. I really do. It's hard
should be
enough.
a small piece.
Yeah, like
too.
you said, hedging or a little bit, not a lot.
Yeah.
So let's talk a little bit about planning and taxes. It's been quite
Sure.
the year with taxes. And
We started out the year, we really had no idea where we were going to land at the end of the year. But July 4th, I believe we got the One Big Beautiful Bill Act, and that allayed a lot of people's fears. People didn't know what was going to happen with the estate taxes, and so here we are. So now we have an answer. You actually, the Tax Cuts and Jobs Act is not set to sunset anymore because we have a new tax bill. So we would love to talk with you if you have any questions about estate planning.
Yeah. And so one of the things, as we kind of wrapping up the end of this year, is we have looked at a lot of partial Roth conversions, which we've talked about a lot on the podcast.
But they're not for everyone.
Correct, they're not, and it's kind of a kind of case by case. We've actually we've talked about reviewing your beneficiaries, and we do have a lot of clients that are listening, and they actually call or reach out and want to double check that. And so those are areas that if there's a death of a family member or divorce or something that changes in your lives, making sure you have the right designated beneficiaries, not only for primary but contingent. And then also, I think going back to the tax part is, I think because of the uncertainty and now we know, but also after seeing this tax season, I think there should hopefully be a little more clarity going forward.
I think we have about 36 days till tax season starts. Yeah. Woohoo!
Count them down.
Yeah, but with the government shutdown, it's really unclear if we're going to have forms by the end of January. But that's always a question when they pass a big tax act like they did this last year, is when will the new forms be ready? And once the bill's passed, we also have to have the regulations from the IRS. So what is the actual interpretation of the law, and how do you get it on the tax return is the question. It's going to be interesting to see what happens this tax year. I think that there were a lot of things passed with the One Big Beautiful Bill Act that will benefit high net worth taxpayers, but also lower net worth people with lower incomes will benefit as well. So I think that there's kind of something for everyone in that bill, and it'll be, like I said, forms aren't out yet, so it'll be interesting to see kind of how everything shakes out and how it If people get a lot of refunds, some years, the last couple of years, people have owed a lot of money. And I don't know if it's a function of people just not having enough withheld, or if the market was up, and given the fact that people had a lot of investment income and a lot of gains, and they weren't making estimated payments. So it'll be interesting to see what happens
I think
tax
this
season.
year is going to be one of those years where a lot of people owe a lot in tax because it's been such a good year in the stock market, and specifically in certain tech stocks, and people have been taking profits. And I know that in a lot of our clients' accounts, we don't have a lot of losses, which is, what you want.
It's a good thing, but
So the tax loss harvesting, we can't. I mean, a lot of clients have called in, want to do it, but they don't have any losses in their portfolio. So it's like, what else can we do? And so, if you already have a lot of income for the year, don't take more. So, for instance, if you have a business, maybe you haven't invoiced a few clients, wait until January.
Well, that's one of the reasons that I personally think that the stock market may take a dip in the beginning of the year, because I think there's a lot of people holding off selling some things that they have a concentrated position that's grown. There are certain stocks that have grown a lot. It might be 8 or 10% of your portfolio right now, and you want to sell it, but you already are paying a lot of tax this year because you've taken profits along the way. So it would not surprise me if the beginning of the year was a dip, and then maybe, as Vince says, that the market then comes back again into the stocks that we think will do well over the coming year.
Well, because January 15th is the first tax deadline of the year too, Steve. So people are going to need money to pay their taxes. So that's the fourth quarter estimate that's due.
Well, there's another reason why people may be selling a little bit, right?
That's what I'm thinking.
In the first 2 weeks, yeah.
The first 2
And,
weeks.
and I think a lot of the tax loss selling has already happened. There may be a few stragglers left, but I think for the most part, those people wanting to do that tax loss harvesting, I think they've already done it.
Yeah.
There are strategies out there. Speaking of tax loss harvesting, that doesn't require the manual, searching out which stocks you have or investments that are down right now. But there are strategies that you can deploy all year, harvest gains or losses, and actually perform in line with the general indices. So
But don't
forget about that.
We have some people in those strategies.
And
so
they're working really well.
Right. I mean, and if you're one of those people that, likes to have that ongoing all the time, a tax loss harvesting strategy that still does extremely well, or hopefully anyway, does extremely well during the year. It did this year, but who knows, next year, who knows. But that's something that we can show you. So,
Right.
Give us a holler for that.
So there are a couple of tax moves you still can do before the end of the year. I mean, we only have a few days. So make sure that you max out your non-cash charitable donations. If you have things sitting in the garage, in closets, you can take those and drop them off at any one of your Goodwill, Community Resource Center, DAV, whatever is your favorite charity. Make sure you keep the slips, because a lot of people have the misunderstanding that you can only write off about $500 for non-cash donations. And the answer is you can write off quite a bit more, but you actually have to have the substantiation. So don't just throw it in the bin. Make sure you get that slip when you drop it off. And you can write off a couple $1,000s, and that will help on your taxes.
It's kind of like having a trust and not putting your investments inside the trust.
Correct. Similar, yes. And a couple moves that you could do is, if you haven't fully funded 401k, you've got a couple days. Some people still have one more paycheck coming up, so call HR and make sure you have fully funded 401ks, 403bs, other employer plans. You do have until April 15th to fund IRAs and Roth IRAs and health savings accounts. You have until April 15th of next year to fund for 25.
And then 2026, I think we mentioned in the past, is there are some contribution limit changes.
Going up.
Yep. So it might be a good time to get with your payroll provider if you're working and make some adjustments for next year.
And I also saw the tax brackets changed slightly too.
Slightly. Everything's been adjusted for inflation, including the standard deduction. And so we'll see.
On a percentage basis, the people on the bottom are getting a better deal on that than the people on the top.
On some of in particular, the $6,000 deduction for seniors, because that does phase out. Or basically, if you're single and your income's over $75,000, you don't get it. I think it phases. I think there's a phase out range, and if you're married and you have income over $150,000, it phases out. I think it phases out completely at $250,000. So, and I think it phases out 6 cents for every dollar you're over the first limit. So do that math.
So the fear and greed index, that's something.
Yeah, we talk about that all the time. It's now at 58, and we just looked at it before we came in here. I'm telling you, this has been all over
I was
the
like, in
board
the last
this year.
30 days, it's gone to like from extreme fear, neutral, and
Yeah, so it's just
greed.
barely got into the greed category. I don't know. Around the end of the year, Christmas time, New Year's, people are checked out.
Yeah.
This morning, I think it took me about 8 minutes to get to work. It usually takes me 15. There was nobody on the road.
Yeah.
Everybody's with family,
I know.
hopefully.
So
Or they're buying vehicles for their business to write it off.
Oh, there you go. Before
Well, because the bonus depreciation's back, so everybody's going out and they're calling me. Do I need to buy a truck?
and the solar, like the last minute solar, I think is.
That's right.
You have lots of people calling you asking if they should buy trucks.
Oh yeah. At the end of the year, absolutely. People are like, "Do I need to buy a truck?" Oh my God.
Yes.
I'm like, how
I
many
need
trucks
one
do you
too.
need?
Buy one for me.
Or a piece of equipment, or like you said, the solar credit. It's a little late for that if you're thinking about that because
Yeah.
it has to be
No,
actually
I think they
fully
put it-
functional.
yeah. I think they're just
by
last minute.
12/31 of 2025.
I had a client last week say, "Okay, they've been planning it, working
Yeah.
on it, and they're like installing it right now as we speak." So, and so speaking of holidays and the end of the year, we will be open on Christmas Eve till 10 o'clock in the morning Pacific Standard Time, 1 p.m. Eastern Standard Time, and then Friday, December 26th, we're open till 1 o'clock Pacific Standard Time, and then next week. Some of us will be in and out, but we will have our office open. We will be closed on New Year's Day, but just know that we're available if you need us. Obviously, be patient with us because we do have some of us will be in and out.
You keep talking about In and Out, and I'm getting
You want
hungry.
hungry? Oh,
For those people not in
They have good French
California,
fries.
In and
They
Out
do.
burgers are a big deal here. Although I'm not sure why.
It's crazy
they
the
are.
line. People they'll get in the line, and I drive by. I'm like, there's 20 cars waiting for the drive-through.
I've never seen a restaurant that is mandated to have such a long driveway.
And consistently, the cars
and they're
are
always full.
It's funny. This was a couple of weeks ago. I don't know why I was out this late, but it was about 11 o'clock at night. And I said, I really would like to have a milkshake. So
He
I
went to
I went to In and Out, and there was a line. There must have been 15
telling you.
people
Really?
in
I
line
know.
Wow.
at 11 o'clock at night. So
It's the house.
maybe,
And they
have
maybe if that ever
it's
goes
the
public,
secret
we should-
menu.
Yeah, maybe if that ever goes public, that's something that we should buy. What do you think, Vince?
Yeah, hey, I'd love it.
It's not a tech stock.
Although
People like
I'm not,
fast food.
I'm not in and out at 11 o'clock at night.
I'm asleep.
Me too.
Oh, I get bed before that.
Sawing logs way before that.
Only Steve is roaming around 11 o'clock.
The night owl.
I do some of my best thinking at 11 o'clock at night. Obviously, it's not during
With
the day.
milkshakes.
Anyway, anything else that we want to talk about? I mean, this has been an interesting year. It's been another good year, 2 years in a row. Let's hope that next year's another good year. One of these days, the market's going to go the other way, but who knows? Maybe it won't be because of some of Vince's stocks because he keeps buying them. The market's going to keep doing well. I want to say, too, this is our last podcast of the year, and I have a blast doing this.
Yes.
I think all of us do.
We do.
And I hope that you who are listening or watching enjoy this and tell your friends. Tell them, hey, these people are funny. They're fun. They're informative.
We're
They're-
funny.
We are.
Well, funny looking.
Only the tax person is funny.
Or crazy.
So it's been a great year, and I just wanted to thank everyone who has been listening. And we really do get a lot of feedback these days. We know a lot of you are listening. So hopefully this has been a great year. We really want to wish you a Merry Christmas, a Happy New Year, and hopefully next year will be the best year ever. Happy investing, everybody.
Thank you.
Happy investing.
Thank you.
Merry Christmas.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.